Nvidia, go back there in the AI trade with the Milius head of technology research, Ben Wrightsey.
Chip-making giant Nvidia broke the $3 trillion valuation mark.
Who knows what other reasons it continues to go up? It's just unbelievable.
Big news about Nvidia's stock. Nvidia took a small dip, but there's more to the story. AI is transforming the tech world, and major changes are reshaping industries and markets. Could these shifts lead to a big change for Nvidia? Join us and explore how Nvidia is taking over the entire industry. The dominance of Nvidia in today's market. Nvidia started back on April 5, 1993, thanks to three folks: Jensen Huang, Chris Malachowsky, and Curtis Priem. They wanted to mix up the gaming and multimedia world with top-notch 3D graphics. Their big moment came when they made the first GPU, which really shook up the tech and gaming industries. By 1999, Nvidia had created the GPU, a special chip that made graphics way better and faster. This move made Nvidia a big deal in the tech world, boosting everything from video games to scientific research. Nvidia didn't stop there. They saw that these GPUs could do a lot more than just graphics. They were great for artificial intelligence, AI, because they could handle lots of data at once. So, Nvidia started making GPUs just for AI. By 2016, these chips were at the heart of many AI systems, and Nvidia's own AI supercomputer, the Nvidia DGX, was making big strides in AI research. In recent years, Nvidia kept pushing the AI boundaries. They came out with the Nvidia A100 Tensor Core GPU, a powerhouse for serious AI work. In 2024, they introduced the Blackwell architecture with something called the NVLink switch, which lets multiple GPUs work together smoothly, great for training big AI models. Nvidia's focus on AI has really paid off. In 2024, they made $47.5 billion just from their data centers, a huge 216% increase. Major tech companies like Google, Amazon, and Microsoft use Nvidia's AI tech, which is crucial for things like self-driving cars and handling large amounts of data. The focus then shifts to staying updated on Nvidia's progress and changes in the stock market. For those interested in real-time updates, following relevant social media accounts could be beneficial as they provide regular insights into significant market shifts. Nvidia's performance has a notable impact on major indices like the S&P 500 and Nasdaq 100. Even when the S&P drops, the market can stay stable if more stocks rise than fall, showing the unpredictable nature of market dynamics today. There's a clear distinction emerging between Nvidia and its tech peers versus other market sectors. Over the past year, AI-driven companies like Nvidia have seen significant returns, showing how influential AI is on the market. Nvidia's earnings reports often cause notable market shifts, with potential stock movements of 11% impacting the market significantly. This influence is comparable to large companies like Disney, highlighting Nvidia's critical market role. Nvidia's market value recently reached $3.1 trillion, marking it as one of the most valuable companies worldwide. Analysts predict a further 24% rise in Nvidia's stock due to its strong position in the upcoming decade's computing market. This market upgrade cycle is expected to involve significant spending, positioning Nvidia as a leader in this transformation. Other tech giants like AMD and Intel are also progressing in AI, but Nvidia leads in performance, scale, and developer support due to its investments and strategic partnerships. AMD's new chip, while competitive, doesn't match Nvidia's latest offerings in memory capacity and performance. Intel is expanding its capabilities but still trails behind Nvidia's rapid advancements. Nvidia's influence goes beyond technology, affecting market sentiment and investment strategies. Investors focused on tech stocks closely watch Nvidia's performance due to its significant impact on their portfolios. This makes Nvidia a critical player in the tech sector and the broader market landscape. Moreover, analysts at BlackRock have also noticed this trend. A report discussed by Josh Schaefer from their team highlights that the robust earnings of mega-cap tech companies like Nvidia underpin their strong market positions. The financial health of these companies supports their significant influence on market trends. The exploration concludes by examining Nvidia's recent advancements in AI, underscoring the company's continuous impact on tech innovations and market movements. The unseen forces shaping Nvidia's market moves. Many experts believe the data does not predict a disaster if only a few stocks are leading the market rally. However, he worries about the risks if many investors focus on one sector and then decide to sell all at once. Although this wasn't a problem yesterday because of end-of-quarter trading, it might create big problems in the future, destabilizing the market. Nvidia is very popular with investors because of its leadership in AI and technology innovations, driving its stock prices up. It's not just keeping pace. Nvidia is setting the pace in technology. Despite a recent drop in tech stocks, where many chip stocks dipped from their highs, Gene Munster from Loop Ventures stays positive about Nvidia. He believes Nvidia's AI-driven business is solid and set for long-term success. This shows a complex but promising future for Nvidia, keeping global investor interest. However, some think Nvidia's stock might see more short-term volatility due to market shifts. But its strong foundation and innovation make it a key player in tech. In the last week, the tech sector saw a 10% drop, with Taiwan Semiconductor Manufacturing Company falling by 5%. This reflects nervousness among investors as they wait for the June quarter results due in late July. Despite strong fundamentals, caution is prevalent. Amid this turmoil, our team at Deepwater, focusing on our main Titan fund, took a risk by investing in Micron Technology, which reports earnings soon. This is significant, as it could influence AI tech stocks for months. Meanwhile, Nvidia will release its financials in late August, keeping everyone anxious. Despite the underlying strong indicators, the current market fears are puzzling, though understandable, considering previous large gains. This week is key for AI investors. We are hopeful that Micron will exceed its revenue target by 87%, boosting confidence in the forecasted 50% growth next year. Despite Nvidia's recent stock drop, optimism about AI investments remains high. Next, see how Nvidia is shaping tech's future. The resurgence of Nvidia in the tech investment world. The ever-changing world of tech investments, Nvidia has made an impressive comeback after losing $400 billion in market value. This rebound is a welcome sign, showing a strong recovery from tough financial times. Nvidia's stock has skyrocketed by over 1,000% since late 2022, reflecting investors' keen interest in the booming artificial intelligence sector. But the rise wasn't without its challenges. Many investors, eager to lock in their profits from this dramatic increase, started selling off their shares. This led to a sharp 133% drop in the stock's value over just 3 days. However, this drop is small compared to the company's earlier gains. Nvidia's success comes from the high demand for its advanced chips, which are essential for AI applications. This demand has made Nvidia a major player in driving the US stock market to new heights, despite the broader economic slowdown due to rising interest rates. Leading Nvidia, CEO Jensen Huang remains positive about the future, especially with the continued strong demand for Nvidia's H100 chips. But the story doesn't end here. Nvidia is set to launch the even more advanced Blackwell GPUs later this year. Huang's confidence suggests that Nvidia is not just experiencing a temporary boost, but is poised to keep making a significant impact on the tech world through ongoing innovation and advancements in AI technology. Nvidia's advanced chips are in high demand, and this demand is expected to exceed supply well into next year. These sophisticated chips are hard to produce quickly, posing a big challenge for Nvidia. The company is working hard to keep up with production and market delivery. This situation is likely to lead to a significant rise in revenue for the next few years, maybe even longer. With this in mind, you might be thinking if now is a good time to invest in Nvidia shares. This question is especially relevant as Nvidia is set to announce its earnings in August. While you consider this, remember that creating content like this takes a lot of time and effort. Supporting the channel with likes and subscriptions can really help it grow and reach more people. Let's look at Nvidia's stock and the tech world. Nvidia's unpredictable market movements. Today, everyone is talking about Nvidia, a company that recently saw a dramatic 15% drop from its peak values, only to bounce back by almost 6%. The big question is whether it's a good time to invest in Nvidia. Experts think that, despite the quick rise in its stock price over the years, Nvidia is still a good buy. With a forward price-to-earnings (PE) ratio of just 42.5, it's hard to worry about a bubble. For comparison, during the tech bubble in March 2000, Cisco's PE was a whopping 196. Nvidia still has a long way to go before it hits such high levels. Nvidia plays a key role in the booming artificial intelligence (AI) industry, making it a highly attractive investment. The company's recent financial performance highlights its growth, with a 255% increase in revenue and a six-fold rise in operating income over the past year. These numbers are not just impressive. They showcase Nvidia's ability to surpass market expectations, reinforcing its status as a leader in technology. In the AI sector, Nvidia's GPUs are essential for developing AI models and applications. For example, in retail, Nvidia's AI tools help increase operational efficiency by providing store analytics, personalized customer recommendations, adaptive advertising, and inventory management solutions. Retailers using Nvidia's AI report a 69% increase in annual revenue and a 72% decrease in operating costs due to these technologies. The healthcare industry also benefits significantly from Nvidia's AI capabilities. The company's AI platforms accelerate drug discovery and development. Nvidia collaborates with top pharmaceutical companies to use AI for developing new drugs and improving medical imaging techniques. Nvidia's AI-driven methodologies allow for complex simulations, speeding up the development of new treatments and medical technologies. Nvidia is also a major player in developing AI infrastructure for financial services, telecommunications, and manufacturing. The company's generative AI solutions help optimize networks, reduce operational costs, enhance customer experiences, and drive innovation. Nvidia's comprehensive AI ecosystem includes tools like the NeMo framework for large language models, Rapids for data analytics, and Riva for speech AI, providing a full suite of solutions for various industries. Moreover, Nvidia is committed to sustainability and energy efficiency. The company develops energy-efficient computing solutions for AI, reducing the environmental impact of data centers and AI factories while enhancing performance. This commitment to green technology ensures that Nvidia's advancements align with environmental goals. Nvidia's future in AI looks bright with continuous innovation and expansion. The company is developing AI-driven healthcare instruments that combine traditional devices with advanced AI capabilities, improving diagnostics and patient care. Nvidia's strategic partnerships and investments in AI research and infrastructure continue to drive technological advancements across multiple industries. But this isn't the whole story. Darren Nathan, the head of equity research at Hargreaves Lansdown, advises looking beyond short-term ups and downs. He highlights that even with recent drops, Nvidia's shares have gone up by 190% over the last year. This huge growth explains why some investors might be cashing in now. Nathan is confident in Nvidia's stability and believes the company's small setback won't cause bigger market problems. He points out that Nvidia's recent price movements have been less wild compared to other big tech companies, often called the Magnificent Seven. This stability and the perceived value during dips have led many to take the opportunity to buy Nvidia stock, expecting future gains as the company continues to lead in AI and tech innovation. But the story doesn't end here. Nvidia's role in AI is just one piece of the puzzle. As the tech world evolves, Nvidia's innovation and leadership will likely continue to drive its growth, making it a compelling choice for investors looking to ride the wave of technological advancements. Some analysts and investors think Nvidia's pricing is spot on, but others believe Nvidia's stock is still too pricey. The worry comes because Nvidia's shares are trading at a price 73 times higher than the profit it made last year. This makes Nvidia look much more expensive compared to the S&P 500 index, where companies usually trade at just 26 times their earnings. However, Nvidia's big selling point is its potential for long-term growth, which could lead to a huge change in the economy. Now think about Nvidia's new tech for investors. Nvidia's upcoming technological marvels. Nvidia is set to launch groundbreaking new technologies, including the Blackwell B200 GPUs and GB200 superchips, expected to significantly outperform their predecessors. The Blackwell architecture features a dual-die design, with each die hosting a massive 208 billion transistors, connected by a 10 terabytes per second chip-to-chip interconnect, offering unprecedented performance and efficiency. The GB200 superchips combine the power of 2 Blackwell GPUs and a Grace CPU, promising a performance increase of up to 30 times compared to the H100 model, specifically for large language model inference. These chips are also designed to be 25 times more energy efficient, marking a substantial leap in both performance and sustainability. This combination makes the GB200 superchips particularly appealing for AI workloads, including generative AI and inference tasks. The B200 GPU, another star in the Blackwell series, is built for extensive AI and high-performance computing tasks. It boasts a 1,000-watt power module, up from 700 watt in the H100, yet it supports air cooling. This GPU promises a 4-fold increase in training performance and a 30-fold boost in inference performance. The B200's architecture includes new precision formats like FP4, enhancing both performance and accuracy for next-generation AI models. Nvidia's innovations are not limited to hardware. The Blackwell platform integrates tightly with Nvidia's AI enterprise software, which includes AI frameworks, libraries, and tools necessary for deploying production-grade AI. This software ecosystem ensures that enterprises can fully leverage the capabilities of Blackwell GPUs, making them an integral part of AI development and deployment. Global cloud service providers such as AWS, Google Cloud, and Microsoft Azure are among the first to adopt Blackwell-powered instances, ensuring that these advanced capabilities are accessible to a wide range of industries. Nvidia's DGX SuperPods, incorporating GB200 and B200 systems, are expected to be available later this year, providing a complete, data center-scale AI supercomputing solution designed to meet the rigorous demands of generative AI workloads. The Blackwell architecture also includes intelligent predictive management capabilities, which continuously monitor hardware and software to predict and prevent downtime, thus optimizing operational efficiency. This system can autonomously adjust compute resources and manage maintenance schedules, ensuring continuous productivity without the need for constant oversight. Additionally, the Blackwell GPUs support advanced networking features, including Nvidia Quantum 2 InfiniBand and Spectrum-X Ethernet, which provide high bandwidth and low latency necessary for large-scale AI operations. These features ensure that the infrastructure can handle the massive data throughput required by modern AI applications. The launch of Blackwell-based products is expected to significantly impact the tech, AI, and cloud services industries, driving a wave of upgrades as companies seek to maintain competitive advantage. Nvidia's forward-looking strategies, combined with their cutting-edge technologies, position them as a leader in the rapidly evolving AI landscape, likely boosting their sales and profits as organizations rush to adopt the latest advancements. But here's the twist. Even with the current high price, Nvidia's stock is expected to balance out. Looking at the expected profits for the coming year, Nvidia's price-to-earnings ratio should drop to around 40, which is still high but more reasonable. This change shows the market's belief in Nvidia's key role in powering generative AI hardware, solidifying its spot as a leader in tech innovation. As Nvidia keeps pushing the limits of technology, its financial numbers and stock price are expected to better reflect its significant contributions to the industry. The rollout of new technologies is just starting now in its second year, and it might keep growing for up to 5 years. Financial experts from Bank of America see a big chance for growth that looks more promising over time. They predict that by January 2025, the company's revenue will hit $19.9 billion. This amount is double what they expect for 2024 and more than 4 times what the company made last year. This fast growth means that if you think the company can reach these big goals, buying its stock now could be a smart move. Are you ready to bet your future on this company? Leave comments and subscribe for more.